This is our Forex blog for August 31st, 2012, and like we do most days, we like to start off by looking at our currency meter, finding the strongest currencies versus the weak to buy, and selling the weakest versus the strong is the first step of our easy three-step Forex trading system. You can see the dollar pretty much weak on all time frames today. The real-time trend, 15-minute, hourly, daily, weekly, and monthly. And the weekly shifted pretty much down around 6:30, and it's been down since then. Basically, you want to buy the strongest currencies versus the weak and sell the weakest versus the strong. And there's actually two easy three-step systems I'm going to teach rather than come up with some weird name for the other one. It's a very simple way of trading. There's 3 steps to it. Identify the currency, look for the entry, and then the exit. It's that simple. No matter what system or tools or methods you use, you're going to have losing trades. So you got to make sure that the losses are small as possible, and you want to be in the currencies that have the best chance of continuing to trend, which means if they do, you're going to have many multiple-sized wins compared to your losses. So if you lose 6 pips when you're wrong and you make 20, 30, 40 pips when you're right, you don't even have to be right 35, 40% of the time to make money. So let's scroll some of these back a little bit and look at it earlier in the day. You can see that earlier in the day the euro was strong on all time frames. The dollar was weak. So obviously you want to buy the euro dollar. It's that simple. Looking at this chart, we see the hourly moving average right here in the middle. Underneath that, we look for sells. Above that, we look for buys. And the new Build Your Own Trend tool is focused on showing us the intensities of the trends. And it's also extremely fast at identifying new trends. Notice it went green right here in this bar. And then it got really intense right here. And it pretty much kept you in the whole move up. I don't think there's any tool out there that will get you into a trend pretty much even before the breakout. The next bar shows you it's incredibly strong, and it just continues to trend up. For those of you who do not like to look at the histogram, we have colored bars that showcase the real-time trend strength momentum by coloring the bars 11 shades of red and green. Let me show you that. This chart shows the colored bars, and so without having the histogram on the bottom, the chart is bigger. And one thing to notice on, here's the hourly moving average. Above that you want to buy. This chart also shows our hourly point of controls, which show you basically the previous hour most traders had positions right here at 25.08. During the next hour it was right here. Above that hourly POC you want to buy, and below it you want to sell. We also show the previous day's point of control, which is all the way up here. This is the lower value area. When it's underneath that area, if you see any signs of weakness or any of our 2 methods to look for sells, you want to look for sells. Once it gets back above here, you want to look for buys. Obviously, the momentum was to the upside today. The nice thing about having a bigger chart by using the colored bars, you hit Control F, you bring up your fibs on here, and usually the second fib target's the maximum distance this is going to be. So this is kind of exploded up today, went up again, hit the second fib target, and look at how amazing these previous hours point of control is for a counter trend trade. It came right up to the point of control. This is where most traders had positions during the previous hour, and because this thing had already gone up statistically way too much and it was exhausted, you really want to look for a sell here if it can't get back above the point of control. It can't, so when it goes underneath this bar here, you want to get short. And usually when currencies move a lot like this, they're going to pull back at least 38%. So you have a profit target already in advance, which is down here at 1.2576. You're short this thing around 14, and you're going to make 30, 35 pips if you're right, and your stop's just a pip above the bar's high right here. So you're risking about 10 pips, and a beautiful pullback. And for the most part, it stayed red all the way down there except for these 2 little bars. So if you want to get short here, get out, get short again here, and then get out right here. Whether you scalp it or get in and out, or hold on for your profit target, it's up to you. And once it had a decent sized pullback, guess what? It went above these bars high, the bar went green, And as it's going up, it's getting darker and darker green. As we scroll over to the right, if you see any signs of the bars getting less green, maybe you're out of part of your trade here, all right, out of the second half here. You're in that trade somewhere at 78, and let's say your average exit's up here. So you made over 40 pips on that one while risking less than 10 pips. I mean, that's the key to trading. That's the secret to trading, and our tools really, especially on days like this where they really take off, you're going to do very well trading. A lot of days are not quite as easy as this. Let's look for some other examples. Later in the day, the real-time momentum of the Swiss was extremely weak. Now, keep in mind, anytime the daily, weekly, monthly trend is this strong, if you do take trades in the Swiss to the downside, you want to pretty much, take scalp-like trades. Try to shoot for 5 to 20 pips. Don't expect to have 30 to 50 pip counter trend trades. But in some cases, if you're in a trade and it's showing no signs of strength at all, hang with it. The CAD was one of the stronger ones at that time. This is not a chart I typically keep up and running, so I'm just going to bring it up here. We're going to look for CAD Swiss buys. CAD was one of the strongest, Swiss was one of the weakest, and this is what we're going to want to buy. And that's, from, I think, what was the time? A little bit before 10:30. So here's 10:30. This one already has started to trend up here, and it just continued and continued. Now, this is a perfect example of why I've released these intraday value areas. Most of the time, they will help you find these explosive trades very early into the trend. This is going to go download tick data, and it's going to show us where each of the previous hours most actively traded price is. And typically, like I said, underneath it, you want to look for sells. This could have been the low here. If it had broken out, you would have got in. Maybe you did get in. You had a small loss. You were short again here. You made money. And at this point, once it breaks above this, I prefer when the point of controls are all the way down here near the lows. But during this hour, it fell and then it came back. If you used the previous 30-minute one, more than likely the point of control would have been somewhere around here, and it would have got you into it early. But explosive move up, pullback, up, and sometimes it opens up underneath the hourly, the point of control for the previous hour is right up here near the high. I love them when the point of control is right here near the low or in the middle of the bar, and allows you to get a more advantageous price. But just pretty much completely trending up today. Now, I'm going to show the second of our two easy trading methods, and that is using a quote sheet with the previous days and previous weeks point of control. So you add the previous days and previous weeks point of control to your quote sheet or hot list with whatever symbols you want to watch. Value area day and week, which is down here. Once you add them, they disappear from here, but you're going to see that down here when you want to add it to your quote sheet or hot list. And you can just sort, and this tells you which currencies are above the previous day's point of control, the previous week's point of control, and if it's dark green or dark red, it's above the previous day's or previous week's upper or lower value area. So pretty much the euro dollar and CAD yen, you could be looking for buys, sells in the dollar CAD, dollar yen, dollar Swiss, Australian dollar, and New Zealand dollar. So that's the first step of this method. We'll bring up the euro dollar just without any other tools and just look at the point of control on here. And I think, or the previous hour's point of control. I'm pretty sure the euro dollar's point of control was at 25.47. So from that point on, you'd be looking for buys in this one. So 25.47 is pretty much right here. This one already started to trend up. And because it's already above the upper value area, this is a pullback area. This is a pretty high probability trade. You would go along again right here. So you can see the first trade, generated about 30 pips. The second one in around 66 out. That's a nice 50 plus pip trade. The second one on there was the CAD yen. So I'm going to bring this down and put the CAD yen on here. And again, it doesn't even matter the time frame. I prefer range-based bars, 5 pips per bar, but 5-minute charts just come up faster. Let's put on the previous days and weeks value areas just so we know where they're at. Okay, so in this case, the previous week's point of control was all the way up here, so it pretty much already run its course before that would show up. Earlier in the day, this one is actually underneath the previous week's point of control, so if you see any kind of breaks from above to below the previous hour's value area, you're looking for some sells, and there really wasn't any except for this trade right here, which worked. Let's find another one that gives us a more advantageous price. Dollar CAD, this one's underneath both of them. When you're underneath the previous days and weeks point of control, which would be right here in this case, from this point onward, we're looking to sell. And it just broke through the point of control and the previous day's value area low. So this is a wonderful place to sell. It fell about 8 pips here. You probably would have had a small loss here. You're short again here at 9,900. Went all the way down to 64. That's a 35 plus pip move. And this is another example of the trade. However, I don't like to take them once they're this far off the low, off the high. If the previous hour had rallied up, it spent a lot of time up there near the high and broke it up here, that's a trade you want to sell. So I'm not personally going to take this trade. I like it when the point of control is right up here near the high of the pullback. It's a much higher probability trade. Another one that's weak is the dollar yen. This is just a very simple way of trading. You can't miss these trades. Here's the point of control for last week. And so when it breaks that area, we want to look to sell. It's already underneath the previous hour's point of control, so you have this beautiful trade here. And unfortunately, this one exploded up and then came right back down through the point of control. Again, I like to see them be up here near the high, so I'm not taking that trade. New Zealand yen is another one. And again, this is a very easy system. Some days are better than others for finding high probability trades. So underneath the point of control right here, you're looking for sells. And earlier in the day, you don't know if it's going to have this nice explosive counter trend move up. You might have sold right here. And then, here's the exact type of point of control I like. When it rallies up and kind of spends a lot of the remainder of the hour up here at the high, the point of control is up here near the high. That is a phenomenal trade. Once it starts to go down, you have a nice trade, pulls back up, finds resistance, and explodes down. Look, this is a perfect example. It rallied up, went sideways, point of control is right here, right near the high. You can put your stop less than 10 pips right above this high, and that one also fell 10 pips. Phenomenal. It's a very high winning percentage too. Let's finish this method with the Australian yen. So here's the previous day's point of control. Underneath that, we're looking for sells. Above that, we're looking for buys. And sometimes you don't find trades. This one, if it had come up to this area here and found resistance, which oftentimes happens, and then it went through this level, that would be an example of selling if it had gone underneath that. I like point of controls right near the previous hour's high because it's just a low risk trade. But on the general principle, just look at how many times these act as support resistance, and above the previous hour's point of control it tends to trend up. Underneath the previous hour's point of control, down, down, down. Above the point of control right here, up. And then when it's underneath that during the next hour, it opens up right here. It's had mostly a downward force. I'm going to show one more with the dollar Swiss. It's underneath yesterday's value area, and it's 80 pips underneath the previous week's value area. Now, when currencies are down too much, in this case, it had a counter trend move up, and then it broke this area right here. Once it's underneath that area, you can look for sells. This is really the first move down, so typically currencies will make at least 2 moves down. This is not the perfect trade right here. If it had come up to the point of control right here and found resistance, that's a great place to sell. But you do have a trade right here that falls 20 pips. And notice how that next hour, when it's above that point of control, because it spent most of its time, and most traders have positions at 95.16 for the previous hour, tends to go the opposite direction. Now, again, like I've said before, this is not a trade I would take because it's so far away from the highs. It's an unfortunate thing. But one of the reasons that this was the area where it ran out of steam is because it's last week's value area low. This is where 68% of last week's trading activity happened. It's a very key resistance area, and earlier it was a support area. If you don't get a bounce off of that, it's very likely to go down, which it did. And last but not least, to end today's blog, always draw your fibs. They're phenomenal places to take your profit target. And you can see that's exactly what happened. If you get down to a fib area and you think that for the time being, for the next hour to 3 hours, it's probably going to do a counter trend trade, this is a great place to buy. And especially when you see that the previous hour's point of control is right here, it's not able to go underneath it. Guess what? When it starts to break out, you're in maybe at 22. Great place to get out. It's not likely to go above this area. You made 30 pips on a counter trend trade. There's so many different ways to trade with our tools, but knowing where most traders have positions, where the biggest positions are at during the previous hour, 4 hours, half hour, really improves your trading. And you can set these to anything you want. I have it set as on hourly, but you can use 4 hours if you're a longer term trader, or even 30 minutes. 30 minutes is pretty phenomenal too, especially for scalpers. And notice, the previous half hour, this is where most of the trades were. The last half hour right here, this area, most of the trades were at the high. And so anyone who was short down here during this half hour was short pretty much from this price here. So when it starts to go up, they're losing money, and that's going to, trigger stops. Notice how often the price just can't get above them, and when it does, it pops. And notice, again here, resistance. It's pretty phenomenal how this works. And it works because, traders tend to defend the areas that they have their trades at, and if it penetrates those areas, a lot of people are losing money, and, stops are going to get hit, and that's going to usually cause the price to move 10 to 20 pips. You only need 10 pips a day to double your account every 2 months. So this is a phenomenal and very easy way to trade. You're not going to make money on every trade, but you're always going to have tiny losses, and frequently you're going to have 10 to 30 pip wins. And that's going to eat up the losses, and if you take enough trades, leave you with profit.